straight to our advanced questions. Okay, so let's go to the first one. We have a question on the growth plans with regard to the growth plans of the company from Jamil, John, and three other people. What business segment will be the growth driver of your business in the years to come? And maybe we could combine it with this one also from Misael and five others. How will GTCAP's growth be sustained in the next 5 years?
If I may take that question, Charles, and
Go ahead.
thank you. Yeah, thank you. It's a very relevant question. And well, we sort of touched on this earlier during the presentation of Francis. Now, when it comes to which business segments will be the growth driver, as you can see, banking and auto have been the pillars or the cornerstones of GT Capital's net income for quite some time. Just a way of history, there was a time that auto contributed more than banking, but now it has reversed and the banking accounts for the most. But if you can see the progression from first half of last year to the first half of this year, banking has been reduced and Toyota is gaining share. But I guess what is more, shall we say, worth highlighting here is what also Francis mentioned, the growth of our property. And this is what I've been explaining earlier, that we see our property business as the third growth engine of GT Capital. Whereas in the past, as I've said, it's just been banking and auto. Now we look at property to be a significant contributor maybe in the medium term. And currently, we see some steps towards the right direction. As you can see in this chart, last year, it only accounted for 6%, but now it's up to 9%. And with all those projects I mentioned, such as the federal land communities, the joint ventures, the retail space that are upcoming, all of these will boost our property business and that it will grow some more, probably to mid-teens in the medium term, as and when all these projects come into fruition. So how will that growth be sustained in the next 5 years, which I believe is the second question? Well, the bank will continue its very good performance. I think that is a given. The bank will always be strong. It is, as we all know, one of the three biggest banks in the Philippines. Now, for auto, we'd like to say that it has already exceeded its pre-COVID levels in terms of unit sales. So that is expected to continue in the coming years. And finally, again, to reiterate, we expect the growth to come from the property business. So I hope that addresses the first two questions. Thank you.
Yeah, I think that's very clear, straight to the point. Okay, I guess we could go to the next one from Evan. How has the current interest rate environment changed GTCAP's strategic plans in the short, medium, and long term?
Francis?
Yeah, on the interest rate environment, well, it has, in terms of the impact to the different businesses of the bank, definitely the bank has benefited from the increase in interest rates. For the bank alone, the policy rate hikes that was implemented by the central bank has impacted positively net interest margins. In fact, as we ended the first half of the year, net interest margin was closer to 4% year on year. Aside from that, most of the loans of the bank is basically short-term in nature, and these short-term loans are subject to periodic repricing. So that will likewise impact the bank. Aside from that, of course, the major drivers of loans coming from the corporate sector and consumer. So these are will continue in terms of driving loan portfolio growth moving forward. Now, for the autos financing sector, so definitely yes, rates have likewise impacted the margins of Metro Bank and PS Bank. Well, in the case of Toyota Financial Services, it's probably dependent on loans to finance their loan expansion, but it has the leverage, or it has the was able to capitalize during the pandemic, the growth in its portfolio, because banks during the pandemic shied away from providing consumer financing, including auto financing. Now, in terms of the auto sector for Toyota Motor Philippines, the sales volume continued to improve. Wholesale volume for Toyota Motor Philippines and retail sales volume for the dealers. So it continues to improve, because even if rates are increasing, loans are actually, those sales are fueled by financing. So 80% of auto sales are funded through financing. And we mentioned about the penetration rate of Metrobank, TS Bank, and Toyota Financial Services combined. It accounts for about 36% of the total auto financing. So that's a major driver for our auto manufacturing and importation business, and for our auto dealership business.
Okay, if I may tie it back to your to the presentation a while ago. So you were mentioning, for example, the optimism that you have with regard to the property sector. So with all the the launches that you're planning to do in the coming periods, my question is, will the higher rates be a hindrance in terms of the take up of these properties? Will it dampen the demand?
Yeah, a very good point there, Charles. But if you look at the typical buyer of federal lands projects, it would be higher mid-end and all the way to luxury and high-end, as clearly shown on the pie chart on the right. Now, it may not be as impacted by interest rate hikes. And also, we have to bear in mind that a good number of clients avail of housing mortgages, loans. And the sense is, even though there are interest rate adjustments upwards, the banks do not necessarily reflect that immediately or to the extent that the policy rates have been increasing. And besides, the term for a typical housing loan, as we all know, can range anywhere from 10, 15, all the way to 25. And maybe if I can answer that a bit, segueing to the auto, because there are parallels in that regard. No? In the auto space, the typical loan is 20% down payment and 80% spread over 5 years. So if you look at the monthly amortization, even though granting an increase in interest rates, it's not really that significant to dampen the appetite to acquire. On this slide, you can see that even if we assume a 300 basis point increase in interest rates, the corresponding or the consequent increase in monthly amortization in peso amounts is just a shade over 800. So we believe that will not be enough reason to postpone or to totally disregard the purchase. And I guess this kind of situation also translates or is reflected in home mortgages.
All right. Thank you. Okay, I have another follow-up on that because we were mentioning you were discussing a while ago the strength in the car sales, which is very evident as of the first half, at least even actually for the first 9 months. I think the numbers have come out, at least officially, for the auto sales, and it's still very strong for the first 9 months. So my question is, in your view, why do you think are car sales so strong? I mean, just to add context to, I'm sure everybody's familiar with our audience today, but a lot of different sectors are, reporting a little bit of weakness, diba? In the consumer spending, with the high inflation, high interest rates. But for some reason, our car sales continue to remain strong for this year. So why do you think is the reason for this? And will it continue going forward, I guess?
Thank you again, Charles, for that very relevant question. And we've been asked quite frequently about that because some sectors are, pleasantly surprised that in spite of headwinds, as you said, it continues to be strong and robust. Now, no doubt, revenge spending is part of it. We have to bear in mind that for at least 2 years, there were noticeable, significant slowdown in car sales. But in the case of Toyota, they were doing better than industry because, as Francis said, it has an in-house financing arm. So revenge spending comes into play and it continues. Also, other factors are the supply situation is getting better. So slowly, we have more units to be sold, and that translates to more unit sales. Now, there is also the need to acquire vehicles because, as we know, our public transport system is not optimal. It's a bit difficult. So buying a car is more or less a need rather than just a want. Plus, there is this theory in economics called the motorization of an economy. And well, simply put, this means that when a country exceeds 3,500 US dollars in terms of per capita GDP, there will be a shift from two-wheelers to four-wheelers. And from where we sit, we believe that this motorization happened pre-pandemic, was put on hold because of COVID, but now it is resuming in a very significant manner, and we see more people buying vehicles, notwithstanding that our GDP for the last quarter was not as expected. There was a dip, as we all know, but nonetheless, the buying continues because people need vehicles, especially with the reopening of various industries that were severely hampered in terms of mobility during the pandemic. And lastly, I'd just like to highlight that in spite of the number of cars we see in the road, especially in Metro Manila, the Philippines still remains one of the least penetrated when it comes to autos or passenger cars. As you can see in this chart, we are just 45 vehicles per 1,000 individuals, whereas our ASEAN neighbors, such as Malaysia, is now close to 500, meaning to say it's still a growing industry. And that's why we believe this will continue in the years to come because definitely there is no saturation in the auto industry.
Okay, yeah, again, very insightful answers, no? But if I may just to ask another follow-up on that.
Sure.
Because you mentioned, for example, that the Philippines, the penetration is still very small compared to the region. But at least anecdotally, when we drive around, it's also very traffic everywhere, right? Especially in the Metro Manila. So could you share some metrics, right, to I guess to support this motorization trend? I guess, are you seeing the demand more from like outside Metro Manila or in Metro Manila, the demand of cars, or is it like do you track the first-time buyers or of the cars? I mean, anything you could share to help determine whether this is part of a bigger trend rather than something temporary?
Well, when it comes to the geographical distribution, there was a time when Metro Manila accounted for majority of the sales, at least in the case of Toyota. As you can see in this slide, we present the retail sales distribution. So in 2019, provincial accounted for only 40. Sorry, Metro Manila in 2019, the red line, Metro Manila was 40 and then 60. But now, fast forward to first half of 2023, you can see that Metro Manila is declining and the provincial has increased to 63%. And it's worth bearing in mind that in many years ago, Metro Manila or the NCR, National Capital Region, accounted for the majority of the sales. So we believe that this means it's a sustainable trend because it's not just dependent on Metro Manila. It's not just dependent on the National Capital Region. As you can see, even in the spread of the dealerships all over the archipelago, you see the island groups of Visayas and Mindanao accounting for numerous dealers across the brands, not just for Toyota. And if that is the case, then it's not a totally dependent, as I've said, in Metro Manila, and that's good because you will also have dispersion of the vehicles, and we welcome that because, as we know, Metro Manila is a bit, well, to say the least, congested, and if we can spread it out to other geographies within the Philippines, so much the better. And we believe that there is capacity, there is there is spending power sufficient in the provinces to acquire the vehicles. So I think this slide is a very good metric as to how it will pan out in the coming years.
All right. Okay. Let me get back on track. No? So going back to the advanced questions. Okay. This one is from Ryan. What are the biggest business challenges you're facing and how are you handling them?
Well, off the bat, of course, it's inflation. I guess that's accepted by all, and even government is saying that it is one big headwind, and we closely monitor it. But if it's any consolation, we see that the business lines of GT Capital seem to have a bit of insulation, if you will, or protection from inflation. It shows resiliency. As a matter of fact, an investment bank, rated us as one of two companies in the Philippines that show a lot of resiliency against inflation. And we reiterate the evidence to this is the resurgent and continued sales of Toyota, as well as the property business. And maybe because of the customer profile and the other factors we mentioned, like the need to acquire vehicles, the interest rates not necessarily skyrocketing, enabling the Filipino to acquire autos through financing. And all of these contribute and makes us a bit, shall we say, more able to survive a high inflation rate. But we also believe that in due course, inflation will be managed by our economic managers, and that will be less of a headwind.
All right. Okay. Next one from Floyd John. Does GTCAP have plans of expanding their portfolio as the economy continues to grow in the foreseeable future?
Most definitely. In fact, just to share with our audience, in the past 10 years as a listed company, our main objective was to acquire the non-banking businesses of Metrobank, put it under GT Capital, because that's a mandate of the holding company within the group, so that the bank will focus on purely banking and financial businesses, while we have the likes of Toyota, Federal Land, Metro Pacific, Axel. So that has been done in the past 10 years as a listed company. So now that we are entering our second decade as a listed company, a GTCAP 2.0, so to speak, we are definitely looking to expand the portfolio. It's not just these 5 buckets or verticals, but we are looking into other sectors as well, where we can establish strategic partnerships, market leadership, with a strategic partner bringing in the technology. Just some top of mind sectors would probably be healthcare for one, because it may be unknown to many, but we do have a hospital within the group. Manila Doctors Hospital is part of the GT Capital system. Although it is majority owned by Metrobank Foundation, we consider it as a key element in our ecosystem. So it makes much sense for us to look into healthcare. Other sectors that are of interest are data centers, for example, renewable energy. So all opportunities are open, and we do have a group that looks into those opportunities. And as the economy recovers, as the question states, in the foreseeable future, then we expect also to participate in that growth.
Okay. So yeah, one of your major investments currently that you have is your investment in MPI. So 20% stake in MPI. So I just want to ask, how does this investment, your investment in MPI, align with the overall strategy of the company?
Well, for Metro Pacific, it's basically a long-term investment for GT Capital. The fact that we've been holding on to this investment since 2016, and definitely we treat this investment as we're in for the long haul. We're very bullish on the sector, especially, well, we have new shareholders, new investors. That's part of the part of the company, and we look forward to further building the relationship, further contributing to build the business moving forward.
We see a lot of alignment and collaboration with Metro Pacific ever since we invested in them years back. And the sectors in which they are present is very much interesting to us. If you look at them, they're drivers of the economy, power, healthcare, toll roads, water. Those are all key sectors. And similarly, that's where we are also. So we see a lot of alignment. And I mentioned earlier that in our property project, we were even able to negotiate two interchanges to be built. And that's part of the synergy. That's part of the collaboration that we have with Metro Pacific, which is we are with them for the long haul.
All right. So very good example, no? the exit in the
Very
property.
clear, very
Mhm.
clear example of the collaboration and cooperation.
Yeah.
Yeah, the
Okay.
synergy, the cross-selling opportunities, yes, definitely.
Okay. Going back to our next question from Bryant and three others. What is the competitive edge of GT Capital over the other Philippine conglomerates?
Well, all conglomerates have their unique elements, their unique selling proposition. In the case of GT Capital, we believe that it is our strategic partnerships with best-of-class brands. As you can see in this slide, we are very comfortable with top-notch names in various industries in which we're invested. And if you notice, there is a good number of Japanese companies in our partnerships. So we're very, very comfortable. We're very familiar with the Japanese way of doing business, which all started with our partnership with Toyota way back in 1988. So I guess this is one distinct advantage in the sense that we benefit from their technology, their operating systems, their expertise. Now, what we bring to the table, on the other hand, is our local exposure, our footprint. We are present in all island groups. We have, as I said, 73 dealers of Toyota, Metrobank, and PS Bank combined, of close to 1,000 branches all over. So the familiarity with doing business in the Philippines, here you can see the footprint of GT Capital. If you look at just group-wide employees alone, it's close to 50,000. If you look at the branches nationwide, this is what I mentioned. We are present in almost all provinces, salespersons in the tens of thousands. And if you total all of that, including that of Metro Pacific, clearly it will reach tens of millions of Filipinos. So this is what we offer our strategic partnerships, the sheer scale, the footprint, and to reiterate, the local expertise. And we are very familiar with how it is to do business in the Philippines. And as a result, it's a mutually beneficial partnership, such as Toyota since 1988, AXA since 1999, recent additions are the Grand Hyatt partnership, the Nomura Real Estate, and all of those are expected to prosper just like the other older or those partnerships that have been established earlier.
Okay, very clear, very clear. Okay, going to now the specific subsidiaries. No? First on Toyota. This is from Primo. How will electric cars impact the bottom line of Toyota Motors in the medium term? No? So I think if I maybe to I guess further clarify, I think what the question meant. No? So because there's lots of excitement about the fully EV, the electrified vehicle. No? So is there any concerns there with regard to Tesla or those fully electrified vehicles coming into the country in the future, or do you see this more as an opportunity? I guess.
Well, any entry into the EV space is welcome because it will create more awareness. I'm sure our audience is familiar with the pronouncements of conglomerates to bring in electric vehicle of different brands, and I guess for the whole industry, that's a net positive because the Filipinos will be exposed to more models, more variants in the EV space, and that will also earn their trust and confidence in that technology. Now, if that happens, Toyota will definitely be in a position to maintain its dominance, whether it's HEV, your traditional internal combustion engine, or full EV. I think the dominance of Toyota will still be there. And as I've said, the whole industry grows when it comes to EVs, and Toyota will benefit as well. And that's a welcome addition because we need more Filipinos appreciating the technology.
But I guess as a follow-up, do you see the HEV or the hybrid vehicle? Is it more of a temporary solution, or is it really gonna be here for and temporary and then paving the way for a fully electrified vehicle, or is it more permanent?
It's more of a, yeah, sorry, Joey.
Go ahead, please.
Yeah, it's actually the HEVs currently, it's more of a transition in preparation for building the necessary infrastructure for electric vehicle charging stations. So in the meantime, while the infrastructure for EV charging station is not yet in place, definitely the strategy of Toyota is really to first build on a hybrid electric vehicle.
But of course, they can coexist down the road.
That's true.
Given the shelf life, or the expected life of the HEV, inevitably they will be together in the market at some time, and it will be maximized, the HEVs, as and when the full EVs come along. So it will be complementary. But as Francis said, in the meantime, while waiting for the necessary infrastructure to come in, Toyota's strategy is really to introduce HEV. So it's a market-to-market approach. Clearly, other countries that are more developed will be more capable of absorbing full EVs sooner than we do.
But so again, just to be clear, so eventually, let's say years and years, I don't know how long it would take, but years into the future, will Toyota also be in a position to eventually offer fully electrified vehicles?
Yeah, understand that Toyota is one of the biggest manufacturers of EVs, and as you can see in this slide, targets have already been set by Toyota globally. In terms of EVs, it intends to sell 3.5 million EVs by 2030. That's battery EVs. These are not hybrids, but battery EVs. In the case of Lexus, it's 1 million by 2030. This is global. No? And I think the roadmap has been set already as far as Toyota is concerned when it comes to the EV strategy. So it's just a matter of time.
Yeah, and just to share, for our audience, I think Toyota Motor Corporation, the Japanese brand, it's the share price has also been doing very well actually recently. So I think the market is also giving them, is also bullish about their prospects in the long term.
That's true, because I guess the trust in Toyota, its quality, durability, reliability, is not limited to internal combustion engines. We have every reason to believe that this trust, borne out by the QDR, will also flow through as and when EVs are the mainstream offering. The dominance in ICE can be very much replicated in EVs.
All right. Okay. Our next question is from Jeffrey. Does opening more Toyota branches result in significant growth in sales, or does it result in internal competition? So I guess the question also in a way related to how are you really growing your sales in Toyota? Is it through more branches, or is it on the supply side? How exactly do you drive growth for Toyota?
Well, in the past, clearly, it was through the brick and mortar expansion of the dealerships. You can see the progression from 2014, but since 2019, that progression has more or less stabilized, and I guess the need for brick and mortar branches are not that urgent anymore because it sufficiently covers the archipelago. Now, another question is, does it cannibalize? Yeah, sure. I think it happens in any sales initiative, whether it's in malls or department stores. Once another branch opens, even in quick service restaurants, there will always be some form of cannibalism. But I think the geographic dispersion of the Toyota branches are quite well thought of. to the point that they all remain profitable. Now, if they do not expand in the brick and mortar, of course, there's the online initiatives, the virtual showrooms, and I guess this is the right time to also share with you that Toyota has introduced the Toyota Wallet. It's sort of an online payment platform initially geared for your transactions with the dealer, and that could be the potential source of expansion also in the digital space.
Okay. Okay. Thank you. Thank you for that. Okay. Next, moving on to federal land. Also from Jeffrey. I don't know if this is a typo, but yeah. Do you expect a slowdown in commercial office space leasing?
Well, we have a slide which shows that currently the supply is managed, meaning the developers, I believe, have not been launching aggressively because they're cognizant also of saturation. And if you look at this slide, the dark blue would be your supply, and the lime green would be your office take-up on an incremental basis. And you can see that for several years, the take-up is more than the supply. And I think this is an industry-wide phenomenon that they do not, should we say, haphazardly launch, because clearly there are factors like work from home, the COVID pandemic, and all that. So there is a conscious effort to make sure that there is no oversupply.
Yeah, to be specific to federal land, actually, Metro Bank has actually is currently redeveloping its head office along Metro Bank Plaza in Buendia near DBP. So that's why there would be around 5 to 7 years before the new head office of Metro Bank will be completed. So in the meantime, the offices of Metro Bank have actually relocated to GT Tower, where we are at right now, also to the Metro Bank offices or in Grand Hyatt, the Grand Hyatt offices, also in the Bay Area. So in the meantime, we expect take up of office space in these areas to be to improve because of the redevelopment of the Metro Bank head office. So this is at least recurring income for federal land in the next 5 to 7 years.
Okay. We're now going to what I think are the two most important or my most intriguing questions on my end, sent by our participants. So, of course, I mentioned a while ago, GT Capital has performed very well this year, up 25% year to date. However, if you look at the PE, for example, of the company, it's still less than 5 times, right? So obviously very low. So the question is from Darwin and 3 others: why isn't the market reflecting GTCAP's value despite the good fundamentals? What's your best? What do you think?
Well, for many years, we were arguably traded because of Toyota. And that was understandable because we were the only, and we remain to be the only auto play in the market. Now, when the headwinds started to blow towards Toyota, there was a bit of, shall we say, hesitation on how it will recover, especially given the pandemic. So now we are out here, precisely why we are talking to our investors, both retail, institutional, to clearly explain that the recovery is deemed to be sustainable, and also the other parts that may not be fully understood, such as property, because as we all know, it's unlisted. So maybe there's a bit of discount that's automatically attached because it's not as easily accessible, which is why the investor relations team with our CFO has been active in going out. We have been giving out various webinars. Quite recently, we were in a roadshow in Singapore and Hong Kong, precisely to explain and hopefully be able to tell the story in such a way that the valuations will improve, the multiples will improve. And we believe that the recent, as you said, year-to-date performance of the stock has been quite respectable, to say the least, carving out the recent decline. We have been hitting 52-week highs, as a matter of fact. And I guess the trust is starting to come back. Maybe there were some questions in the recent years because of that dip in Toyota for one, and also the unlisted components.
All right. Okay. And then the next one, I think this is also, in my opinion, related, okay, to the valuations. From Noel and one other person, are there upcoming dividends for shareholders to look forward to? So I know you do give out dividends, but I guess the question is, could there be an increase in dividends in the near future?
Actually, well, let me answer that question by actually highlighting that there were, in the 11 years existence of GT Capital as a listed entity, there were 3 years wherein the prior year was GT Capital actually reported record net income, net earnings. So in addition to the regular dividends that the company has been declaring, which is at 3 pesos per share, the company likewise declared special cash dividends, which is over and above the regular cash dividend. So the most recent was in 2020, because 2019 was a record year for the company. And in addition to the 3 pesos regular cash dividends, GT Capital also declared another 3 pesos in special cash dividends. Now for 2023 performance, and we're hopeful that we will be able to sustain the record earnings in the first half, and this would continue for the rest of the year. And if it so happens, then definitely our board will consider another special cash dividend. But of course, it depends on our financial performance for the rest of the year.
Yeah, if I may just push it a little bit further, so if I may, because just thinking about this way, if the company is trading at 5 times PE, it means your income is like 20%, right, of the market cap, right? So if you declare even like a 30% payout, that would translate to like a 6% dividend yield, versus even if, let's say, at 6 pesos per share, including, let's say, at 3 pesos, hypothetically, in special dividends, that's only about 1%, right? So I guess my question is, I don't know if you could answer, but my question is there a possibility for dividends to I guess materially go up, given the significant improvement in profitability? You have to, I know, just a 30% dividend payout ratio would translate to a 6% yield. How unlikely or likely is that?
Actually, it boils down to capital allocation, our cash flow. We're a conglomerate, and as we mentioned earlier, so we are already in chapter 2, or the second decade of our existence as a listed entity, and definitely we'd like to further grow our other businesses aside from the 5 businesses that we are involved. So definitely, we would like to improve on our dividend yield, but of course we would also want to take into consideration our growth prospects moving forward. So definitely the new sectors that we would want to be involved in. And in fact, as we speak, we are talking to various counterparties in order to finalize the deals that we are working on at the moment. So definitely the sectors that we are looking at right now is definitely significant. In terms, I say significant because we feel that if ever it happens, once we sign the definitive agreements, it will move the needle in terms of net income performance moving forward.
At this point, maybe, Charles, it's just really the optimal allocation of resources. Of course, we've looked into dividends. We've considered various scenarios on how to improve that. But of course, we have also to take into consideration, as what Francis said, we are in that mode that we would like to expand in other sectors, which would entail considerable resources. So it's really balance, it's really the optimization of what we have vis-a-vis what we want to do.
All right. I think that's clear. Okay, so I think we can now go to the live questions. I hope you, Sir Francis, Sir Joy, you're still available to join
Sure.
us.
Yes,
Okay.
of course.
Yeah. So could we show the first live question that we have? Car sales have been very strong this year. Can you describe the profile of these buyers? Is
Well,
growth
sorry. Go
is
ahead.
growth mostly driven by first-time buyers or repeat customers?
I was about to
From
say the good thing about Toyota is that its wide models mix caters to all profiles of buyers, no? Whether it's a young entrepreneur or a retiree, a businessman, in the government requirements, for example. So the various launches tend to be segment leaders because they are able to address the needs of the various profiles. So it's a good mix across the board.
I see. All right. Okay. Can we go to the next one? How much of a threat is the influx of Chinese car brands which are cheaper and has more features?
Actually, rather than a threat, it's a welcome addition, especially in the EV space. As I've said, they come in, there's more awareness. But again, if you look at the total reach of Toyota, it's very much dominant in terms of dealerships, for example, or the services it offers. The Chinese brand, sure, can be more aggressive, more affordable, but I think in terms of factors like resale value, spare parts availability, post-sale servicing, I think Toyota will retain its dominance.
All right. Okay. Okay. Another question about EV. No? Chinese EV brands are starting to dominate the EV car industry. Given your tie-ups with mostly Japanese companies, do GTCAP see itself adding a major Chinese EV car manufacturer in its portfolio in the foreseeable future? From Felipe.
I don't think this is possible because our agreement with Toyota, this has been going on since 1988. It's an exclusive distributorship arrangement.
Yeah.
So only Toyota.
Okay. So, and I think that's clear. As Sir Joey mentioned a while ago, some advantages that Toyota has over the peers, and I guess there's a reason why you're number one in terms of market share, Toyota. Okay, so may we know the expected life of a battery on an HEV? What type of battery storage are you using currently? So very, very specific, lithium, solid state, etc. From Cesar.
I understand the expected life of battery of an HEV is about 10 years, but of course it also depends on the usage of the vehicle. So it could probably last longer than 10 years. On the type of battery storage, I think it's lithium.
Okay. All right. Have you seen an uptick in car loan defaults and home loan defaults? From Robin.
Now, in terms of car loan defaults, I'm actually citing NPL. It's less than 2%. For home loan defaults, well, this is for Metro Bank and PS Bank combined. It's about less than 2.5%.
Yeah, so these numbers are very low, no?
Yes.
I think even historically, there hasn't been any uptick. Is this fair? Is this correct?
Yeah, because, well, for instance, in the case of car loans, Metro Bank, PS Bank, and TFS, they've been very consistent ever since. They're actually very particular on the minimum down payment, which is 20% of the selling price of the vehicle. So unlike other dealers or other banks, wherein they sometimes become more aggressive, so they usually lower the minimum deposit requirement or the minimum down payment requirement. So in the case of for mortgage loans, it could either be it's A2 or A3 type of payment scheme, wherein it could be either be 70 or 60% of the purchase price of the condo unit or the lot that the buyer has purchased. And this is again based, if it's a condo unit, then it's a lump sum payment that becomes due and payable. And then whereas on the housing lot, so depending, once the lot is already, usually it's a 3 to 4 year payment scheme for home loans.
In other words, whether it's in mortgages or car loans, there is a group-wide conscious effort not to be overly aggressive, even though the market encourages or fosters such aggressive stance by other competitors or players. As far as the group is concerned, there is that middle ground, so to speak, to make sure that it doesn't go too aggressive, which will result in more defaults. So it's a good balance.
All right. I think that's clear. I think we have one or two more. I'm not sure. Maybe two more. Good afternoon. Is there any negative effect to GT Capital as a company moving forward with the current disturbances, especially the Ukraine and the Gaza war from our
Directly, the short answer is no. So familiar to all, we don't have any direct imports from the likes of Israel or Palestine or Ukraine. But of course, we closely monitor this development because, hopefully not, but it could result in bigger geopolitical issues, and especially when the oil supply is affected, then that surely can be another big headwind. But as of now, it does not we do not source anything from those countries involved.
All right. Okay. And maybe we can have the last one. Do we have the last one? Oh, any buyback plans in the future from Lubomir?
No such plans in the near, medium, or long term. Actually, we have considered it. We've studied the implications, and again, going back again to my earlier explanation, cash allocation. So definitely, we'd like to, instead of buying back our shares, we would rather earmark our cash towards our ongoing projects. Actually, what we've done recently is while waiting for the finalization of potential investments or acquisitions, we've actually paid down our loans. Actually, early this year, we paid down 6.1 billion in maturing retail bonds. This coming Friday, we are redeeming our Series A perpetual preferred shares. So that's about 4.8 billion. So once we complete the plan on Friday, then for the year, we would have reduced our overall debt at the parent by close to 11 billion. So as a result, we would be able to realize savings on interest. So definitely, at the moment, because given our ample cash, we would rather pay down our loans and save on interest moving forward. And doesn't make sense for us to refinance given the high interest rate environment, and we do not see it these interest rates softening in the medium to long term.
Right. So if I may maybe phrase that a bit differently. So instead of because there's like two ways to return value to shareholders, right? Through dividends or through capital appreciation or earnings growth, right? So I guess what GTCAP is trying to do, correct me if I'm wrong, is you're focusing to instead grow your earnings either through
Yes.
new businesses or lower interest payments, as opposed to giving out the dividends, right? So more on the capital appreciation. So hopefully this would translate to more capital appreciation instead of just higher dividend.
Very accurate way of putting it, Charles. No, thank you for that. And maybe rest assured that all options were considered. It was put on the table, including a buyback, But I refer to what I said earlier, that it's really the optimal use of resource. And we believe that buyback is not really the most ideal. We can invest our resources in other, as you said, other initiatives that will result in capital appreciation. And that's what we have been doing rather than engage in a buyback. But I'd just like to assure everyone that we consider all options.
Okay. I think that's clear naman. So it means also that GT Capital is still very bullish in the Philippines, right? That's why you're not, because usually if you think about it from a corporate life cycle, right? Usually you see the high dividends for like more mature companies with less growth like opportunities, right? So is it a fair statement? GT Capital still sees a lot of opportunities in the Philippines today?
Most definitely, there are still a good number of sectors that are underpenetrated. As a matter of fact, our lines of business remain to be underpenetrated, as we explained earlier this afternoon. And that's right, we see the opportunities here onshore, which is why our focus will be within the Philippines.
Okay. So Philippines, not hindi muna outside the
Not
country.
at this
So,
point, because to reiterate, there's still a lot of opportunities within our country.
So I don't want to keep you for much longer. So thank you, Sir Francis, Sir Joey. Would you like to share some closing thoughts before you?
Sure.
Before we,
Sure. So first of all, let me reiterate on behalf of GT Capital our sincere thanks to our audience. Fantastic, close to 200. What a big number. And this is really a rare opportunity for us to touch base with such a number of interested investors. So thank you to the audience for your time this afternoon. I know we had to go through some very technical discussion, but you were with us, and we hope that we were able to address whatever questions and concerns that you have. And with that, I'd also like to personally thank you, Charles, and the rest of your team in COL Financial. This is very much an appreciated initiative and opportunity for us. We want to tell your audience that we are here and definitely having your concerns in mind. As a matter of fact, there is an instruction from the team to take down questions, and so that we can also evaluate them deeper after this session. So we just like to assure your audience that GT Capital will definitely not rest given its successes, its failures. It will continue to challenge itself. It will continue to improve shareholder value, all because we put a lot of weight to supporters like COL Financial, and of course our investors. So again, thank you to everyone and have a good evening.
Sir Francis, do you wanna
So
add something?
actually, thank you also for inviting GT Capital to your to COL Conversations. So thank you very much.
Okay, all right. Thank you, Sir Francis, Sir Joey. So okay, so to wrap everything up, so one good thing about being in a weak market like where we find ourselves in today is that it's much easier to see which companies are doing really well. And as mentioned at the top of the program, GT Capital has been the best index member, right, for the year-to-date period, increasing by 25% for the year-to-date. Okay, so but of course, the biggest question is the sustainability of this outperformance, right? And I believe that ultimately that would be driven by also the sustainability of the earnings growth momentum of the company. So today we've heard the growth plans of GT Capital, right? So in particular, they focused on the growth plans of federal land through several partnerships and project launches, as well as Toyota, right? So and I guess what I want to say is that should these future growth plans materialize and eventually translate to even higher profitability in the coming periods, then I think that investors will be in a great position to be rewarded in terms of share price performance, right? This is especially true if and when the global markets or the Philippine market conditions eventually recover. All right. So thank you everyone for watching today's COL Conversations. For those who'd like to be part of our invite list for future conversations, you may register through bit.ly /COLCON sign up, right? And we'll be making you a part of our list, right? So thank you once again. Wishing everyone a good week ahead, and see you